Good evening. Today is the 19th July, and in continuation with the previous video, I once again have the Nifty 500 chart set up on the daily time frame. As we see today, the market, after having a gap up spinning top close on Friday, gave a clear gap down doji today. The gap up spinning top followed by a gap down doji has created what we call as a clear cut evening star. We have also understood that this particular level here, which I will mark in red or maybe in darker red, has typically been the resistance, and the occurrence of an evening star at the all-time high resistance needs to be taken at least seriously. In the previous video, we had identified that 13,430 is a reasonable stop loss to have. However, after the formation of this evening star, we are waiting for a confirmation which would be a new low below this evening star, and therefore it is reasonable now to move our trailing stops to approximately this level. So this should be roughly 13,550 on the Nifty 500 index level. Now broadly speaking, we see an evening star formation, a clear-cut selling pressure on the index. We'll just have a quick look at what are the possible critical levels anticipating a potential move on the downside. So now, first step is to look at where can we find the major supports, major visible supports. So here we can see that this zone here is a gap support, right? So this is the gap support, and this is likely to be the support zone 1. In addition, we can see that this region here, which is the low of the bullish piercing, is support zone 2, followed by, since we know that the structure is creating repeatedly newer highs, it is reasonable for us to include moving averages to understand areas of potential support. So the first moving average that I will look at is the 2050 moving average, and I can see that the 20 moving average coincides with the first gap support, while the 50 moving average is near the piercing support. So it is reasonable to say that this region here, which is also a gap around here, is a region of reasonable support for the market, and any dip around these levels will encourage us to look at oversold stocks from the perspective of buying. However, on removing these moving averages and adding a 200 moving average, we see that the value support is very far away, which means that as long as the index is trading in these levels, above 13,200 levels, it is reasonable to buy the index with a target around these levels, 13,700. However, if we see a sharper pullback near the 12,200, 12,200 and 12,000 levels near the 200 DMA, we would want to accumulate the index, because obviously this is clearly a bullish trending structure. A bullish trending structure forming an evening star on triple tops with multiple layers of support on the 20-day moving average, 50-day moving average, and the 200-day moving average leads us to believe that in the short term, it is likely that there could be selling pressure in the market, but this selling pressure will eventually resolve on the long side. So with that information, hopefully you found the assessment useful. We will discuss our open trade positions perhaps a day before the Eid holiday or maybe after the opening. Then have a good day tomorrow's trade session, and Eid Mubarak to all our viewers. Take care.